Good afternoon, everyone. I almost said good morning. I am Nancy Quinn, previously Ganzakoffer, and I am here with Carleen Lamay of C2 Accounting. And this is a good topic today, Carleen. Why don't you tell everyone what we're talking about?
We are talking about mistakes that interior designers make and how they can be costly to their businesses.
Oh my God, so costly. As we know, we've seen a ton. So let's get right into it. I just did my share on Instagram, and I'm going to go over to Facebook and do that too. So why don't you get into it for us?
Sure. Well, let's just start out by saying that, bookkeeping mistakes aren't just numbers mistakes. They directly impact profitability, cash flow, and really even your peace of mind because you get stressed out. So today there are five that we're going to talk about. And then at the end, I'm going to ask you which one you think most of your clients tend to make because you are in their books, I know. But mistake number one is the oldie but goodie, mixing their business with their personal. Like that is bookkeeping mistake number 101. Just stop
Yes.
doing it. Now, I will say this. It is realistic that occasionally you will grab the wrong card. Occasionally you'll pay for a business expense with your personal or your personal with your business. But when you make it a habit, you make it a process, you not only have messy books, you can have inaccurate tax deductions, but you're opening yourself up to IRS flags. And if you're audited and you went through the trouble of setting up an LLC, you could lose your LLC if the government deems that you're operating more as a sole proprietor. So we just don't want to do it. Draw a line. Business over here, personal over there.
And if they're a sole
Non-negotiable.
proprietor, they're still not supposed to be putting it in their personal account unless it's rolling over as a payment to themselves, correct?
So the difference is here, and we talked about the protection. So when you have an LLC, the reason you go through the process of setting up an LLC is that there's a legal protection between yourself and your personal assets and your business assets. If you start mingling things on a regular basis, and let's say you're sued, and someone can show that you have an LLC, but you actually operate like a sole proprietor. Now that LLC may be null and void. It's called piercing the veil. And now your personal assets could be liable if you ever get sued from your business. And that's why all of us set up LLCs. It's for protection. Like I don't want someone coming after my house if they want to sue C2 accounting. Carleen likes having a place to live. So
Absolutely.
yeah.
So yes, I do see that often. As a matter of fact, somebody just in my next group is starting on September 23rd, and there's somebody who already is in the group that does some of that by taking payment and using their personal bank account. A lot of people are using ways of transferring it, and it goes right to their personal account, which is really
exactly.
So,
and then are you then recording that in QuickBooks or it just gets messy and let's make it like life is hard enough. Right. Let's just keep it simple. Let's keep business for business and personal for personal. All right. So that's mistake number one. Okay. Mistake number two is not keeping receipts or proper documentation. So do you have to have a receipt for everything? No. I think the IRS limit is like anything over $75. And with a lot of our clients, if you're buying things online, you're getting emailed receipts. So that makes it really easy. But when you're shopping retail, you're picking up all these odds and ends, and you're not finding a way of tracking the physical receipts, that could be an issue. It's only an issue if you get audited. But that's part of the reason for having good books is that if you do get audited, you can go, here you go. Like I know everything's above board. I have everything documented. I don't have to worry about it. So my advice is just making sure that you have a process, a system, even if it's just scanning things and putting them in a Google folder or a OneDrive folder, just having a place to keep those receipts. I would say a digital copy though, because with thermal paper, after a while, the ink fades. And so I would say if you're going to keep receipts, take the time and just go ahead and scan them into something. If you're using QuickBooks, you can scan them into QuickBooks. If you're working with a bookkeeper, we'd probably send them over to like a Dext or something like that. But you want to have a way of tracking those receipts.
Yes. And I'd say right now, both the issues you've mentioned so far are big issues for when people come to me. So I can't wait to hear the other three mistakes that interior designers make. I have a few in my head. I want to see if they're on your top 5 list. Okay.
Yeah. Okay, good. So we're 2 for 2 so far.
Yeah.
Mistake number 3 is waiting too long to reconcile or not reconciling at all. So when I say reconcile, when a bookkeeper, an accountant says reconcile, what we actually mean is you're taking the bank statement, the credit card statement, the loan statement, and you are physically matching it to what's in your QuickBooks, essentially. And without doing that, there's no way for you to know if your QuickBooks is correct. So I've seen, for example, anyone on here who uses QuickBooks Online can close their eyes and picture what it looks like on that screen where you're going to categorize your transactions. And what you normally see is like the bank balance and then the QuickBooks balance. And when you see those two are way off, so the bank balance is 5,000, but your QuickBooks balance is 100,000 or a negative 200,000, that's a really good indication that something's wrong and you probably have never reconciled. And why is this important? One of the biggest things I see with interior designers is when they're using third-party software like Design Files, for example, and they have those invoices syncing over. So when that happens, QuickBooks records your sale. So it shows your revenue. But then when the deposit comes in, they turn around and go, oh, that's a sale from Mr. Jones. And they put it as a sale. So now what we've just done, we've double recorded our revenue. And what does that mean? That means when you go to file your taxes, instead of you actually saying that you made $300,000 this year, it looks like you made $600,000 this year. And now you're paying taxes on not $300,000, but $600,000. So we want to make sure
hope that somebody would recognize that, but sometimes
you would think.
I know.
Well, and here's the problem: not every single tax accountant goes into QuickBooks. A lot of them are still like, just send me your reports. Well, just sending you their reports does not let them know if the reports are correct. They're making the assumption that they're correct, but if no one's actually verifying the data, you don't know what you're paying and why you're paying it. So just being super understanding that reconciling is really, really important.
And I just
want the only way to catch errors.
I want to touch on that point for a second, because I had an accountant that I would just send reports to. And when I was doing my own bookkeeping and didn't know what I was doing, then yes, bad information creates bad information that they're using to do your tax return. So until I had you doing my bookkeeping and knowing that it's clean, and if I have a disagreement, I ask you and you fix it, or you look into it and you let me know how I can, adjust it. The accountants just take whatever I give them and they do my tax return based on that. So if I give them messed up information, they create a messed up tax return.
Exactly. And, when you figure it out, it costs money to go back and redo tax returns, right? And now if you've overpaid, now you're waiting to get a refund. But if you underpaid, now you're going to get hit with penalties and interest, and that's no fun. So just something as simple, just reconciling every day could definitely go a long way. Your books are kind of like your GPS. You don't want to drive blind, so making sure they're accurate.
Yes.
Mistake number 4, overlooking project-specific expenses. You preach this, I preach this. The business might be profitable, but are you actually making profit on each of your projects, right? Understanding that, yes, I may have sold this $100,000 job. I'm so excited. But when at the end of the day, if it costs you $110,000 to do it, you just lost money. It looks good vanity wise. I sold $100,000, but if you didn't make any money on it, what's the point, right? Exactly. So understanding how much you're actually making on every project is super important, especially as you grow. And when you have one or two projects, you have a spreadsheet, it's a lot easier to kind of like manually track that. But when you have a team or you're coordinating 5, 6, 7 projects, you have to have a better way of doing that. And usually QuickBooks is a great way of doing that. Or once your business grows, going over to Studio Designer is another great way of tracking profitability on a project level. And then mistake number 5, ignoring sales taxes. Oh my gosh.
Oh my God.
And not even just ignoring, but not understanding them. So I would amend what I said instead of just ignoring, but not understanding them. So here's some of the mistakes I see. I see people not charging sales tax correctly. So it could be that one incorrect school of thought is that, well, I paid sales taxes, so I don't have to charge my client sales tax. And I can tell you, for most states across the U.S., It's the end user, the final destination tax, which means whoever is the final destination, that's what you're going to pay. That's what gets charged the sales tax. Whether you paid it or not is kind of irrelevant, especially if you have a markup built in there. If you don't have a markup, why are you even buying furniture for someone? So,
yeah, you just brought up so many issues. I can't even track all of them, like literally. So if you're buying retail and then marking it up, so you're paying tax and then you're marketing up and you're not charging the end user tax, and then you didn't charge tax on the margin difference between what you paid and what they're paying.
And actually, for most places, it's not the margin. You need to charge tax
on the whole thing.
On the whole thing. And so what clients will say is, I don't want to pay taxes twice. I already paid them. Well, first of all, you're not paying them. The client is paid. Your client
should be,
because you're the fiduciary. You're just charging us for the government and giving them their money. I can use North Carolina as an example, which is where I'm based. I had a prospect who was insistent that she didn't have to charge sales taxes on retail purchases. So I called the state because I'm like, you know what? She needs to hear it from the horse's mouth. And the state said, basically, I don't care what she paid or how she bought it. What she should do is try to buy things at wholesale, because regardless, she has to charge sales tax to the end user. And I will tell you that's the case for most states, because that's how states run, by tax dollars. So they want their tax dollars. Another mistake I see is when you have cross border sales. So especially for people who live next to another state.
Yes.
Understanding that you need to be registered in this other state if you're going to charge sales tax. Understanding that every state has something called a nexus. So like how much, so for example, New York State, if you have like $500,000 in sales and 100 sales, and then you're responsible for having sales taxes in that state. Another state could be if you have one sale in that state, now you're responsible for charging tax and registering and all that stuff. So understanding your tax liability, the implications before you just get very excited and accept this job in another state. Speaking with a bookkeeper, hopefully, or at least your tax advisor before you start this project, to make sure that you're covered and that you're registered appropriately and appropriately charging sales taxes. I've seen people charge their own state sales tax for another state, and it's never going to be correct. The scenarios are endless. Sales taxes can get you in a lot of trouble. I have a client right now going through a sales tax audit. It's not fun.
Oh my! We
charge for that. We have to charge for pulling together all this audit documentation, right? Because that's not bookkeeping. That's other stuff that we're doing, and so it's a lot. And if you have everything, if you're doing everything the correct way, you have nothing to worry about. But if you're not, it can get pretty messy.
That's what I was just going to say and remind everybody. The 5 tips you gave today on avoiding costly errors. And you said to me in the beginning, you're going to want me to weigh in on which one you think most designers to my profit academy. And I got to tell you, all 5 of them.
All five.
It's that bad. Like I even wrote them down to make sure I'd remember them, right? Intermingling.
Well, let me recap them. Make sure you got them right. Okay.
Go ahead.
So mixtape number 1 is mixing your business and personal.
Lots of people do that, but it's not as common, but a lot of people do that in the beginning, especially. Go ahead.
Especially in the beginning, right? When they're first getting started. Number 2 is not keeping receipts or proper documentation. Number 3 is waiting too long or not reconciling your accounts, reviewing your finances. Number 4 is not tracking project-specific expenses to understand profitability at the project level. And number 5 was ignoring sales tax rules or managing sales taxes incorrectly.
I'm going to say one word to everybody who's watching live or on replay: goals. This should be your goal, to make sure that you're doing all of these things that Carleen is mentioning with your bookkeeping. And if you're not, you should be calling a bookkeeper like Carleen's company, C2 Accounting, and getting someone to do this. Because I knew one interior designer, you're going through it now with somebody, who went through a sales tax audit, and it was hell. Practically shut down her business. I'm surprised she made it through, because it was so much work to give what they needed to close the case, to figure out the penalties. And it made her cry a lot, and it was overwhelming, right? So Everybody doing it right from the beginning, it makes a huge difference if you are to get audited. And hopefully you're never audited, but you never know.
You never know.
You don't want that panic. You want I got this, everything's in order. So get your process and procedures for your bookkeeping in order. Call Carleen, get on C2 Accounting's calendar. And if you're just struggling to grow your business, period, give me a call and get on my calendar, right? So there's help out there for everybody. And your bookkeeping is the very first thing that you should be hiring for. Bookkeeper. I always say it. Everyone says, who should be my first hire? Bookkeeper. Because that's the thing that's going to mess you up the most if you F it up.
Yeah. It's easier to build good habits from the beginning than to fix bad habits. And if you're
one of my new clients is actually right on, and I had told her to call you already. So, and she said, thanks, can't wait. So absolutely not, doesn't even have QuickBooks yet. So starting from the beginning and starting properly is key. So,
and that's something we could do as well. We help people set up their QuickBooks, and we can show you, if you're not ready for ongoing bookkeeping, we can help you get started and teach you what you need to do to get through. And then you can consult with us as you grow. And then hopefully the goal will be to take it off your plate so you can focus on designing spaces.
Exactly. All right. Did we miss anything, Carleen?
No, I think we got everything. But you know what I would love to hear? I would love to hear in the comments from people who have their own, like, oh my God, I had this mistake. If anyone's brave enough to publicly say, like, a mistake that they had and how it, like, what they learned from it. It's one thing to have a mistake, but I'd love to hear how they learned from those mistakes.
Okay, so people, write in the comments, tag Carleen or I, and we'll write back. What's one of the mistakes you've made in the past with your bookkeeping? Something that taught you something, you learned something, you're doing better, or something that you know you need to learn could be something, right? I think with bookkeeping and accounting, a lot of people just don't even know what they don't know.
Yeah.
Right? It's one of those. It's like numbers and it's scary and all that stuff. And they just sort of shut down and don't do anything. And that's the problem.
Right. And hopefully these conversations that we're having will at least scratch the surface of, like, oh, maybe I should be thinking about this, and get people kind of at least going, okay, it's time, right? We to talk to someone. And no guilt, shame, no guilt, shame, or judgment here. Like, don't ever feel embarrassed. And I've had people do that. I don't care what your background is. Like, we're just here to help.
Exactly. Okay. And we got one comment: waited too long to do it right.
There you go.
There you go. And that's really what most of this is all going to be
about. What's great is that they're doing it right now. So there you go. Give yourself a pat on the back. Like you figured it out. So kudos to you.
Figured out what to do next. All right, Carleen. We will see you next month to talk about more fun bookkeeping and accounting, interior design related topics. And anyone who wants to watch the full episode on replay, go over to my YouTube channel. Carleen's playlist is all there for bookkeeping, so you can kind of binge watch and get all your information.
Get popcorn, get some red wine, and yeah,
make it fun. So, all right, thanks, Carleen. We'll see you next time. Bye, everyone.
Bye, everyone.